And I'd like to greet you guys at the top of the morning. And welcome back to another episode of Wealth Wise Guru. And I'm your host, John Chav. And it is Wednesday, February the 12th, 2025. The stock market this morning is experiencing mixed movements today, influenced still continually by earnings reports and economic data. The market is characterized by a blend optimism and cautious. Key things include the impact of recent earnings reports from major tech companies, which have shown resilience despite economic headwinds. The technology sector is performing well, with stocks like Invesco, QQQ Trust, QQQ showing a slight decline, but maintaining a strong year-to-date performance. Conversely, the industry sector is facing challenges, reflecting the SPDR in Dow Jones industry average ETFs, which has seen a moderate uptick, but remain under pressure from the rising interest rates. Overall, the market is navigating through a complex landscape of corporate earnings and microeconomics indicators leading to various sectors performance. And so it's the day the 12th, so we still have 3 days left for the Fed meeting. So that means the Fed meeting is going to be on Friday. Was it Friday or is it Monday? I think it's 15. When is it 15? So actually the 15th is on Saturday. So why would they have a scheduled meeting for the 15th? You would think it would be the 17th. But either way, this come. I get maybe they'll do it Friday. I don't know, because the 15th falls on a Saturday according to my calendar. So that's going to have a significant impact as well on the market. So it's a lot of volatility. It's a lot of volatility in the market today, as you can see. I woke up this morning with I was down like thousands of dollars, and now it has corrected itself. I'm just up just a little bit above the resistant line. Those little dots, that's what you call the resistant line. Actually up $90.98 or 92 cents. Investing this morning $24,714. Matter of fact, I had thought about putting some puts in place, but the way the market is going back and forth, it's kind of hard to determine if I should put puts either or call in place. And as you can see, I done closed out some of my options. Still have a few that are still open. Some is in the red this morning, and some is in the green. So let's go on down to the stock and ETFs. portfolio. It's up. It's down actually this morning. $84, well, $98, 22 cents. And so far, I still have $72,660 a portfolio. And Tesla is up this morning about $10.28. It's trading at $3 with $338.63. And so that's why I say sometimes it's time in the market beats trying to beat the market. Actually, when you so that's why I say time in the market beats trying to beat the market. A lot of times when you do options, you're trying to predict that a particular stock or a particular share is going to go up, and it's more like trying to beat the market. And sometimes you win and sometimes you lose. Sometimes it's better just to buy some stocks and hold on to them, for a period of time, because you hold on to them long enough, they're going to go up in value. And this what you're looking at now is a prime example of that. These are the holdings that I have in my portfolio. I have closed out some of them. Still have 202 holdings in my portfolio. And so these big numbers are stocks that I have held on to, and they have went up in value over time. The only thing is that you had to be patient enough to let the process take place. It's not a quick get rich overnight scheme. It takes time to build wealth in the market. But if you continue to invest, continue to buy, and hold on to your stocks, it will eventually pay off in the long run. And you can use your assets to purchase anything that you may want out of life, such as a new house or a new car. You can even build a side income just by investing in these assets. So you let your assets determine what you want to do and what you want to buy in life. And if you buy enough of them, you hold on to them long enough, they will eventually benefit you greatly. And as you can see, I have 72. Like I said, I have $72,646 in my stock portfolio. So if I would sell my stocks, this is what I would get. Even though some of it's in the red, some of it's in the green. When it's in the red, that means that it's on sale. So I'm going to continue to buy. Look at the Nvidia is down. It's down this morning, but it's just down by $2.30 cents. So I'm not gonna panic over $2. The share is $130 a share, and I have 113 shares of it, valued at $14,000. So this, actually today I'm losing money on it. I lost $270 some. So you have some good days and you have some bad days. The main thing is not to panic and not to sell. Do not sell. Close out your portfolio when it's down. For when you do, you lock in your losses. If it's not for you, to invest in the market, just at least wait for your trade to go back up to green and to being positive. That way you made yourself some money up, made yourself some profit, and then you close out, take profit. But you never take profit when it's in the red, because you lock in your losses. You cannot recover once you sell. And so, see, Pioneer Technology, see, it's up today. It's at 19,000. I have 115 shares of it. It's up this morning, $2.74. And this is one of the best stocks holding shares that I have in my portfolio is Pioneer. As you can see, I have 166 shares of it, and value at $19,167.72. So for today, see, this is totally different from the rest of them. See, I made $433 just from this stock alone. Total is just under $10,000. So each stock or each share in your portfolio is going to be different. It's going to be performing different. And so this is not an option. This is just regular. This is just buying and holding on to it. And let's see. Still got quite a bit of red this morning. Let's see, what's this CMG? That's Chipotle. Chipotle is up by 66 cents. I have 1.7 shares of it, value at $99. So, once upon a time, Chipotle was trading at I think $1,500, $1,600, $1,700 a share, and now it's $56.85 a share, and it's $56.85 a share because the share split. And once it split, it made it more affordable for the average everyday investor. Because not many people can pay $1,600, $1,700 just for one share. So it split, and it has come down tremendously. As you can see, it's at $56.85. So if you was to go and start buying this right now, and in a few years from now, it's probably going to go back up. And when it does, just like you see Pioneer Technology, just like you see me with almost $20,000 of Pioneer Technology. Once upon a time, Pioneer Technology was, I think I got into it when it was like maybe 16. I don't even think it was 16. Might have been 10. But one while it was down like $6 a share. And look at it now, it's over $100-some. So Chipotle is the same way. This stock is going to go back up eventually over a period of time. So it's you can't go wrong with having Chipotle in your portfolio as well. Trading at 56.88. It's up this morning by 70 cents. Even though I only had 1.7 shares, they were just under $100. I made $1.20. Total of $1.65. So I'm going to be buying some more of this definitely before it start going back up. And then the more of it you have when it does go back up, the bigger your portfolio will become. And so that's a hidden gem there, Chipotle. So if you have a stock that you're interested in, you thought it costs too much, then you look at Chipotle and add it to your portfolio. I'm looking for a Broadcom. That's another stock that split. And split means a stock that has grown and gotten so big, and so where the trustees and the head of the company, they decide they want to do a split to make the stock more affordable for the average individual. Because the average individual is not going to be able to afford to put $1,000 just in one stock. and then sometimes they'll split, and then sometimes they'll just have two stocks that you can invest in. Like I think Google has two. They have Google A and then Google C. And Google A is where I have made $20,000 right at 20, and then Google C is I haven't really invested much in Google C. But they do that for you could afford those stocks. And when you see these slightly pullbacks, when you have these red days, and that is also for your benefits, so that you can afford to get into these stocks. If you just let these stocks just run amok, then the average individual would not be able to afford to buy into this. So now it's time to take advantage of it when you see these stocks on sale like this, and build your portfolio. So far, it's down this morning by 24 or 25 cents, trading at $14.59. So eventually, this stock is probably going to go to like $70 or more. And when it does, let's say I have 141 shares of it. When it goes to $70-some dollars, the market value would probably be like right at $10,000 or more. So right now we just have to hold out and wait for it to go up in value, because it's right now is undervalued, and all the things that they are doing is definitely indicating that it's going to go up in value. And so far it's SoFi Technologies is a financial service platform which engages in the provision of student loans, refinancing options to the private student loan market. It offers home loans, personal loans, and credit cards, and it operates through the following segments: leading technology platforms and financial services. The leading segment includes personal loans, student loans, home loans, products, and related services, servicing activities. The technology platform segment focuses on technology products and solutions revenue. The financial services segment includes the SoFi money products, SoFi investing product, and SoFi credit card product. SoFi relay personal finance management product, and other financial services as lead generation and content of their for other financial services institution. The company was founded in 2011 and is headquarters in San Francisco, California. Listed name for SoFi is SoFi Technology Incorporated, and it is a common stock. So you can't go wrong with having this in your portfolio. You have this in your portfolio and just wait for it to start to go back up in value. And see, here's some news about SoFi. Let's see, hold on. Where will SoFi be in 5 years? And here's the key point. SoFi is tiny compared to other names in the banking business. This small size, however, doesn't mean it is incapable of market beating growth. Interested investors may want to take advantage of the stock volatility and at least hold out for a slightly better price. And see, here's 10 stock we like better than on SoFi. And then you just put your email there. That's the thing about Robinhood is they have all these different side companies that you could also register with and keep you more informed on a particular stock. And with so much volatility in the market today, instead of buying calls, you can actually buy puts, and you can make money on whether the stock is going up or whether the stock is going down. And I'm going to show you a put, and then I'm going to close out the video because I don't want to hold you guys up too long today. Let's go to the S&P 500, and we use S&P 500 because of so many companies there are in the market. It falls up under the those interested falls up under the S&P 500 as well. And here's an example of that. These are the companies, those sectors that falls up under the S&P 500. Some technology, consumer classical, consumer communications, consumer defense, utilities, basic material, financial services, healthcare, industry, energy, and real estate. And then you go over here to the top 10, and these are the Magnificent Seven, but they're called the top 10. You got Apple, you got Microsoft, you got Meta, you got Alphabet Class A, Alphabet Class C, NVIDIA, Amazon, Broadcom, Tesla, and Berkshire Hathaway. And so, since all these companies falls up under the up on the S&P 500, and the S&P 500 is down, and so you want to make money in a market whether it's going down or up in value. So you will click trade, and you hit trade options. And you can do an option, whether it's week, you can do a daily option, or you can do a weekly option, you can do a bi-weekly or monthly. I wouldn't go no further out, maybe a month or 30 days like that, and buying a option in the S&P 500. And the good thing too about buying an option is it's not submitted in stone or anything like that. So anytime you buy an option or what have you, and it start to go against you, you can just simply close it out or just roll it into another position. So you don't have to necessarily keep it until the mature date. And so you can go to the top here and scroll across and you pick your date. And in this case, we'll go to March 21st. And if you own enough of the stock, you could sell S&P 500. But since I don't own enough of it, you need 100 shares of it to sell. So we had to hit buy and put. But if you don't own enough of it, you can either buy and call or buy and put, whatever strategy you want to use. So with the market being like it is, just say we bought a put for March 21st, we're gonna go just out of the market because this is current striking price for today is 602.05. Anything above it is gonna be into the money, and anything below is gonna be out of the money. And it works different as a put. A put means it's going down in value. So again, anything above the current striking point, which is 601, 602, that means it's going to be into the money. And so we'll look at that into the money. And this put is 33.83% chance of profit and has a volume of 1209. That means there are 1209 contracts currently in place on this particular strategy. And then there's another interest of 2,939. Has low volatility, which is 13.63, a delta of 47.43, a theta of 10.95. And so if you want to just watch this particular strategy, you can just add it to the watch list and watch it over a period of time. It's just to see what that would happen. And see, this will be watch list. Right now, if I was to buy this particular stock would be worth $971. And so for a day, this would be my earnings from it if I was to implement it. See, it's already up $2. And so I would just watch it throughout the day to see what it's doing. And if the numbers starting to look great, the way it look like I'm making a profit, then I would just go to trade, and then I'd hit trade buy, and I will put my one contract here, and then I'll just go ahead and do it. This is for educational purpose only. And then I will go ahead and put my 9.75. So you want to make sure that say highly likelihood. See, it didn't went down because it moved so fast. See, it moves so fast. See, you go out here and hit this for your break-even price. So this only costs you $978. So what's the score against you? You can only lose $900 some. Anything else beyond this red dot and then the black dot, anything else beyond it is insignificant. It doesn't matter. You can't lose no more than what you put into it or what you pay for it. From the black dot to the green area is your profit. This is your profit. This is your expected profit area. See? And sometimes you'll reach a pretty good number. Then sometimes that's your max profit. Sometimes there's no. I gotta be honest with you. It's kind of hard to meet that max profit, but it has happened. Mostly you make more 2, 3, 4, maybe 5,000 from this particular position. So I would hit with so it changes so fast. So I had to go back in here and update it, and I put 80. Let's see, 82. And then I hit review. See, I had to make a deposit. See, this will cost me $975.71. And this is a put. And a put means that you're expecting for it to go down in value. And since the S&P/Y today is down, so actually this put will be up by $1.43 because the S&P/Y is down. And let's look at the S&P/Y. See, the S&P/Y is down $3.39 with a value of $601.98 a share. and I currently have 1.3 shares of it, and that value was a little over $800. And so that's how you would do a put. So the name of the game is to make money or make a profit, no matter which way the market is currently moving. And you can also do this with any company that you have in your portfolio. Just say Tesla. If Tesla was down, you can do the same thing. You just go to Tesla and you hit trade, and then you hit trade options. Then you select your date. If you're going to do a call, I would do a leap. My favorite position in doing a call means that it's going to go up in value. Value is a leap, and I usually do my leap a whole year out. The further out you go, the more profit you can gain, because you actually get that position a chance to grow in value. But if I was doing a call, I would go short. I would go like maybe March 21st, and I would either buy or sell a put. In this case, just say if I own 100 shares of Tesla, and I wanted to buy a put, I would hit that, and then I would go down here and look at the current price. The current price is $339 and 62 cents. A put means it's going to go down in value, and so if I'm selling, then that means I own at least 100 shares of that particular stock. So let's go to 335 in this put, which is going to be out of the money because it's below the current striking point, which is 339. Chance of profit here will be 64.78. So let's look at that. And so that would give us a delta of 42.66 or 71 now. And that delta is the amount of money that you'll be making per day on this particular stock. So the higher the delta is when you're doing a call, the greater the profit. The lower the delta when you're doing a put, the greater profit. But you don't want to have a 70 or 80 delta doing a put. And a good delta will be 42, something like that. And then you have to be careful about a put, because you can get say you can do a put, and like say your put is like 32 or 30 or 33, 34, whatever, or 28, 27, something like that. You can get pre-assigned, and you can get pre-assigned on a put, and you get pre-assigned on a put. Say, well, let me back up. This one here's chance of profit 64.70%, volume of 968. Another open interest 3872, vitality 52. And so if I was to sell this, see, I would place my one contract up there in that one column where it say one is already highlighted. And then I put 19.95, and the estimated credit. This is the credit I would get, because it's a put, and it's a sale put. So a sale put means that you're going to be collecting the premium right up front when you activate this particular strategy. And so if the striking point does not hit, whatever date you set does not hit what you say it's going to hit, and then you not only do you have the opportunity to keep the premium, but you also keep your shares. Now, if it does hit, you keep your premium, but then you lose your shares. And so this is the break-even column here. This is your profit on the black dot to the green dot. And like I say, since you are selling this, so you own it. So You own it because you have 100 shares, or at least 100 shares of it, and so you will get that 1974 right away into your portfolio. And that's what you would do if you were going to place a put in the S&P or 500. Now you can also do one right at the money. Right at the money, give you another delta of 46.21. Chance of profit is 63.15. Volume is 1283. The open interest is 6,600. Volatility 52.97. And so this will give you, if you want to sell it, this will give you $2,000, $2,224 profit become available right away into your portfolio. And then if the shares does not hit that striking point that you set, then not only do you get a chance to keep the premium, you get a chance to keep the shares. And I think that's going to do it for today's videos. This video is already going to be long again. And let's take another temperature check and get you guys out of here. Right now, my stock is at $72,980 some dollars, and my goal is actually to get to $1 million. So as if you can get to your first 100,000, your first 100,000 is going to be your hardest. And if you can get to 100,000, then you can get to 200,000. If you can get 200,000, you get to 300,000. If you can get 300,000, you can get to 400,000. And if you get to 400,000, you can get to 500,000. And each 100,000 that you get to, it becomes that much more easier to reach, because you now are leveling up twice from what you had. And you starting out in the dirt, you try and get to 100,000. This might take you a while to get there, but once you got that 100,000, you level up. So now you got something to work with. So now it's easy for you to get 200,000. And then when you want to go from 200,000 to 300, now you level up. You done double your leverage now. So now it's easy for you to get to 300,000 and 400,000, 500,000 to keep leveling up. And that's how you get to $1 million. And that's how you build generational wealth. And that's going to end for today's video. Thank you guys for watching and tuning in. Hopefully I said something that was beneficial to you. And hopefully you learned something from these videos. If nothing else significant happens today, then I will see you guys again on Thursday morning at the opening of the bell. Until then, may all your trades be a good one. Have a blessed and safe day as you go travel to and fro, whether you're going to work, school, or what have you. And again, we thank you for tuning in and watching, and we'll see you on Thursday morning. And God bless and have a good day.